Hey guys, Mike here. So today we get to answer all your questions, and there were some really good questions. I'm not going to get to all of them, so if I don't put them in this week's video, I will put them in next week's video. So I appreciate all the questions. Always feel free to put them down there, and I just kind of log them as we go through the week and stuff. And so, without further ado, you know how I like to do it. Let's just get right into it and start answering them. Feel free to participate in some of these questions as well. And we'll start off with Dr. Marcus here, where he says, I was hoping you could shed some light on what the best/smartest moves you made in the stock market starting in January 2020 through January 2024. Also, some of your bad plays, best investments, mistakes, all that good stuff. And so I really like the question. And, I'll say this as I've thought about it. Two regrets. One was I did a video, and I was still a new YouTuber, right? I don't have the channel for about maybe 4 or 5 months. But there's a pressure you don't understand unless you have it, okay? And so I done this video, right? It was like February 2nd, I think, is when it was. And it said, are these, big-time investors warning us, right? And it was like Jeremy Grantham and a whole bunch of others. And they were saying, man, tech's going to crash. Tech's going to crash, the Qs, right? Because they've been running up. And S&P haven't been doing anything. And so, I told my wife, I said, that night after I did the video, I said, I should sell everything. We were really tech heavy. I sell everything right now. And she said, well, go ahead. And I was like, I can't. Got this channel. You just can't. It's not the way it works, right? And you feel this pressure from your audience because you get to, you're talking to them behind the scenes, emails and all this other stuff. And so I was like, nah, man, because a lot of these people are in this stocks too. I'm not telling them what to buy, but they're looking at these videos and that's what they're buying and telling me. And so, and then of course what happened 3 days later, I think it was, Qs just take a massive dump. Those stocks just go, whew, see you later. And I was like, oh, I'll never do that again. Right, so that was a big regret, but it's just because of the way my personality is, a loyalty thing. That has never happened since. Never happened since. And so, anybody asked me a question about should I buy this stock? I'm like, you tell me. Don't. That's one of the dumbest questions you can ask anybody on YouTube, by the way. And no offense, I'm not trying to insult anybody. I'm just telling you. Like I tell everybody the same thing. Nobody knows your situation. Nobody's knowing how much money you have, when you're supposed to retire. Do not do that. Please don't do that to any guru out there. There's no gurus. Okay, so that ended, and so I regret that one for sure. If I had to go with time machine, I'd do that over again. The other one was GameStop. I didn't participate in it. I knew people that did, and 3 good things came out of that. My risk profile just didn't allow me to get into that, right? I'm not a chaser, and if I don't understand something, I just try to stay on the sideline and just watch, right? And so that was a crazy thing. We learned a lot, but 3 good things came out of it, right? Regular folks made a lot of money. That's awesome. 2, regular folks also learned that Big Daddy is really in charge of the market, and they are not, right? Because when Big Daddy started losing money, they put their neck down on regular folks and crushed them, right? Because they made sure you couldn't buy GameStop anymore, and all you could do was sell it. So then it crashed and burned and never recovered. 3, Wall Street Bets let everybody see what was really behind the scenes of the stock market, and so it put me on a whole new mission, and even my personal life, whole new deal. And I started learning all about and putting videos out for you guys about market makers, dark pools, all of that stuff. And then that led me down to another road of how the market really moves as far as liquidity grab and all this stuff. And so that was great. And so that worked out. But I wish I would participate in it. Sure. And it's funny. True story. I actually bought GameStop about 7 months before that whole thing happened. No, it was a year. Yeah, because when Michael Burry got involved, whenever that was. And it was a while before that. And it just sat there. It didn't do anything for me for like 6 to 8 months. I was like, this is stupid. This money just dying. Because other stocks are going crazy. So I shifted the money out. So you'll ahead and go, well, look at that. Who knows? And I think I was in like $3 or $4, whatever it was. So just crazy. Just crazy. And the other things, as far as doing good, I've done well with Tesla, and I've done enough back testing to show me that I'll never hold Tesla long term. That'll get a lot of people triggered, by the way, in the comments. And again, each to their own. But I've just done enough back testing to understand I'm not doing that anymore, right? I'm going to swing trade and living daylights out of it, but I'm not holding it long term anymore. And so that's one thing I've done, and it's worked out really well. I've learned a lot about crypto, which I didn't know anything about before 2020. I certainly did not, so that's worked out well. And so those are some of the things, I guess. There's others, but I think that's where I'll go with to keep the answer somewhat short. So let me know in the comments what's your 2 biggest regrets and 2 biggest, things you're proud of when it comes to the market and everything. So I appreciate that question. Now, Joseph Alexander asks, can you please address whether fair value gaps can be mitigated in after-hours trading? I noticed out of the 4 fair value gaps left behind by Palantir, that 3 of them were mitigated between Thursday and Friday by that long wick after hours. And the answer is absolutely yes. Great question. And a lot of people, including myself for a long time, just missed all this action, right? If you go to Meta, you see during regular trading hours, there's this huge gap, right? But, you know, if you go down here and just hit ETH down here, extended trading hours, you'll see a whole different world. A lot of the big boys are playing during those hours, right? There's the big move up after hours. And when you go through this chart, again, fair value gaps are just a imbalance between buyers and sellers. And the market hunts these out, right, to balance them out. But you'll see moves off this. And so when it comes down, it gets in that fair value gap, reacts, starts to move up. If it's coming up into a fair value gap, it'll do the same thing. And so a lot of these can absolutely be mitigated during pre-market hours. And if you see during the RTH, regular trading hours, something just have a bounce, and you're like, what's it bouncing off of? There's no support here, no nothing. Well, if you pull up ETH, a lot of times you'll see it. It'll absolutely get mitigated. So yes, you're missing half the market if you don't pull that up every once in a while, just look at it, okay? Especially at the start of the market day that is. So absolutely good question. Hope that helps. Now, next question here says, what do you think about SOXX, SOXX, coming stock split? Do you think it's positive for investors, traders, or not? Let me tell you something. When it comes to a regular stock split, the only reason they're doing this is because the price is so high. So there is, as far as I'm concerned, the charts tell you there's nothing negative about this. It's the reverse splits that are the problem for stocks, okay? This thing has just gotten so expensive. They know a lot of people just can't afford this, all right? And so if they do a stock split, I guess it's a 3-for-1, I believe, where they make it $200-something a share. What that does is it attracts more buyers. And that's exactly what it does. And gives the people who already hold it more shares. So that's a positive thing to look at. And if you pull out, let's just pull up NVIDIA, for example. They did a stock split. If I scroll back here, I'll be able to find it. Let me get rid of that right there. You can see right there was a stock split, right? So they did a 4-for-1. And what happened to that stock? It skyrocketed. And that's before all the hoopla with all that stuff. But if you look at a lot of them, because it got so much cheaper, you know, people are like, oh, I'll buy into NVIDIA, sure. But, you know, the problem is, again, you want to buy $1,000 stock, or you want to buy, you're attracted more to a $200 stock. So it's a psychological thing. The company isn't any more valuable or anything like that. And so hopefully that helps out. And let me know if you got a different answer on that now. And guys, before we continue, if you could hit that like button for me, I sure would appreciate it. It helps people find this video and everything. And also, if you like the content, think about subscribing, guys. Next one comes from Kevin, and he says, Mike, hope you're reading this. Why isn't there any backlash for the Mag 7? There's always two different experiences. Most retail-heavy, promising growth in small caps have been decimated. The price action doesn't even look realistic, and a lot of normal investors who couldn't afford NVIDIA leaps haven't been able to fully participate in the rally. Luckily, I was in SOXX on TQQ. Good for you there, Kevin. But it wasn't like a lot of investors. It would be ugly. Is this a stick it to the little guy situation? Will IWM/Russell recover after rate cuts? I appreciate your transparency here daily, unlike some others. I appreciate that question. And, you know, I don't think it's a stick it to the little guy at all. I think it's just, look, Wall Street is greedy, right? They don't care about the little guy. They don't even think about us. Let me be very clear about that. They don't even think about us, okay? Unless we're like a gnat. Unless we get in and start bothering them, they just leave us alone. They don't care about, you know, what we're doing. And understand, they're just playing it safe. And how do you play it safe? You put your money in the stocks that have the most absolute cash, that have no kind of risk at all of going under or anything else, and you just keep moving them up, moving them up. That's what you're doing. Plus, most of these stocks buy back stock, a lot of it, as you've seen. Some of them pay dividends. So, you know, that's what they're doing. And, you know, retail is getting to participate. If you have a 401k, an IRA, if you own some of the Vanguard ETFs, or the most popular ETFs, those stocks are in those, right? They're probably the most heavily weighted in those. So yeah, I understand what you're saying, and there's nothing you can do about it. And yes, well, IWM, hopefully, if there's not a recession, if they just cut rates like they did in 2019, when they cut in July, there was no recession. The recession didn't come until March, right? We didn't shut down the word till months later, and we didn't even see that on the horizon, right? So if they cut it and it's this, you know, soft landing crap or whatever they're talking about, then yeah, absolutely. I mean, you're seeing IWM run yesterday. You've seen IWM run since November, and so it's already better. But will there be a rotation down in there because of greed? Should be, yeah, absolutely. But I don't think it's a stick it to the little guy. I mean, we always like to think that, but the truth is, they don't care about us, man. They don't even notice us. That's just the truth. All they want from us is our money, right? To put in these 401ks and, you know, all that stuff, ETF and stuff that we do, mutual funds, that kind of stuff. So I get what you're saying, but I don't think it's that. And yeah, IWM definitely has a chance. So hopefully that helps out. Next question comes from Davik Tori, or however you pronounce that. I asked, what is the 5-day rule you mentioned on Google chart? Not familiar with it, as I'm a new member. And what I was talking about here, it's not even really an official rule. It's just a lot of people talk about how it's a 3 to 5 day rule when a stock gaps down. Because people think as soon as it gaps down, it's either going to pop up or it's going to do this crazy continuation, whatever. But the thing is, just wait 3 to 5 days before you try to jump on a hand grenade, right? And what normally happens at that 3 to 5 days, you're going to see the direction it's going to point out, right? And you can see it multiple times on Google. It's got a lot of gaps. You know, 3 days, and then it starts to make us move. 5 days, and it starts to make us move. You saw the same thing on Tesla, where everybody's like, oh, we're going to just jump right on it. And then, of course, what happens? It sells back down, hits the same price point. And so it's like, just give it a chance to kind of to rest here, okay? To say, okay, let's see where this thing is going to go. It might just trade sideways, right? Because a lot of people that say, oh, immediately I'm going to short it. I'm going to short it, right? As soon as it does the gap down, and then they end up getting smoked, or they're, oh, I'm going to go long. And it continues to sell off, right? So that's all people say about that 3 to 5 day rule, okay? So just FYI, hope that helps out and stuff. Now, next question from Kevin says, what are your thoughts on banks? Is it good time to short with the Fed lending program coming to an end soon? You know, that's up to you if you want to short something that you know is going to be backstopped by the Fed. You can see what he's talking about here. This is going to end in March. This is the program that bailed out the regional banks and saved them by them being able to put their bonds up as collateral, right? Because they were so underwater with these bonds, hundreds and hundreds of billions, right? And when you look at the chart, if you're doing, you know, individual banks, sure, I mean, do your thing, find individual banks. But, you know, when you look at this, I mean, you can see that was the big downfall. Here we are now over here, and set on the 100 moving average. And so you kind of, you know what your levels are as far as you're doing just like KRE or DPST or whatever it is. And you can kind of say, okay, well, there's probably your bottom, because, you know, Jerome Powell has said that other regional banks will probably fail because of the commercial issue, right? Coming out here with all the exposure they have there. You see the one in New York doing it right now, whatever. But most likely they'll just merge with other banks as well. And so if you want to short individual names, maybe if that's your thing, you can go for it. But looking at this, I mean, like on KRE, for example, looking at the risk, 12% down to that level or going up, because now it's kind of in the middle. Then, you know, maybe you got like what, maybe 40, 50% to the upside right there. Is that what that is? Then, you know, I don't know. It's risky. I mean, I just look at this chart and I'm like, I don't like banks to begin with, but if you know some that you think are going to go under, the ones with the really huge exposure to commercial real estate are the ones you're going to be targeting. I'm not telling you to do that at all. Make sure you understand that. But that's the ones you want to target for sure. But again, it's risky to short something when you know the Fed's not really gonna let things get too out of hand. So, you know, do your thing. Let me know what you think in the comments. Now, last one comes from Terry here. He says, hey, Mike, what is the ThinkorSwim indicator to find the ranges you mentioned? And what Terry's talking about here is in the morning brief for members and stuff on the Patreon and stuff. I put this right here, ranges, right? And so this is what I do on Monday. I'll do weekly ranges, daily ranges, and then every day you'll get daily ranges on the indexes like the SPY, QQQ, IWM. And this is just what the options market is saying, okay, here's the range we're expecting as far as down and up. And normally between like 68 to 72% of the time, that stock or index will end within that range. It may eclipse it during the week, but it usually comes back in the range. You just saw that with Tesla last week, right? Unless it's earnings, that's a whole different story. And so on ThinkorSwim, if you got it, just go in and say put SPY, right? And I come down here and there's the number, so that's what it ended at. You have to do this in after hours, by the way, not during market hours. And so you come over here to the right and you'll look and they'll tell you what percentage it thinks is going to move the next day. And it gives you the number. And all you do is take that closing price minus that number right there, plus that number, and that's going to give you your range. And there is a calculation. I did a members video on this a long time ago of how to calculate this by hand if you're using like, you know, Robinhood or Webull or anything with options for that matter as well. But that's how you do it in ThinkorSwim, because it just makes it really easy. And so that's normally how it works. And a lot of people just like to use those ranges just to say, okay, we're getting near the top of the range here. And a lot of times what you'll see is if it eclipses that range, as long as it's not some earnings fiasco, it'll usually come back down to close within. So you know, because it kind of lets you know the market's getting stretched, because we know how important options are, right? We know how options absolutely move the market. I've showed it hundreds of times. And so that's why. It doesn't always work, but that's just why I like to do it and put it out there for people. And I think I even cut it off at one point in time for members. And people were like, where is this at? And I was like, because I didn't think anybody was using it. I was like, okay, I'll bring it back. So yeah, people tend to like that. So anyway, appreciate all you guys with the questions and stuff. Tomorrow we'll have the video to set up the markets. We'll have, you know, detailed charts and stuff. I'll put the weekly ranges on there. Maybe I'll start doing it on Sunday as well, because you kind of have that gauge just to understand, like, okay, this is maybe where we're going to drop. This is where we could rise to and stuff. Again, with the S&P just eclipsing 5,000 and taking off, and with a huge weekly OPEX coming up, it's going to be a very interesting week to say the least. So appreciate all your questions. Feel free to put more down there, and I'll try to answer them the best I can. If I didn't get to yours this week, I'll put it in next week's video as well. Appreciate all you guys who watch. Please hit that like and subscribe button on your way out, and I'll see you later.